We'll focus on commodities. The iron ore story I take from our colleagues is about Chinese tepid demand. But in terms of the oil price has also slumped back after we'd watched it tick higher for a period post the OPEC plus cut in production. It's now slumped back to levels that go back to before that cut in production. So we're seeing something broader. It isn't just about iron ore, it isn't just about oil. Something broader in sentiment knocking commodities then.
Yeah, I think it's absolutely right, and I'm very glad I warned you about iron ore, because you would have asked me about that, wouldn't you? But look, I think this does reflect the fact that there is a real pessimism about global demand. Now, we know that there is increasing talk about recession, particularly in the US, but we should observe two counterpoints. One is that, as we've discussed earlier this week on the show, in fact, economists' forecasts for the US economy, the European economy and the UK economy have all been rising in recent months rather than getting more worried about it. But investors see a different view. And the other counterpoint is China. I believe in a relatively positive story in the economy there. Economists believe in a very positive story. In fact, we've had certain banks raise their forecasts just today on the strength of the Chinese economy this year. But again, investors are much more negative, particularly on the Chinese economic story and the Chinese asset story. And really, when it comes down to a commodity view, it's all about what you think is going to happen in China. So I think this reflects the fact that people are negative on China. And I have to say, in that light, it does feel like the geopolitics, the Biden news overnight, must be weighing on this.
OK, that's interesting. I was going to say, do you think that assets can look through that story? If people are positive on China, as you are, and have just discussed how some people are and some people aren't, do you think that assets look through that Biden news, or is this a geopolitical news line that does have some market impact? And it looks as if it is having on commodities, but maybe less so elsewhere.
So, yeah. Look, it's a valid story. I've been talking to the team this morning because most of the team seem to be kind of shrugging it off. And I'm like, do we not think this might materially undermine the argument that some of the China stocks bulls or Hong Kong stocks bulls like I have, that the world is structurally underinvested to the China story? And everyone's kind of going, this has been in the price. This is why they're structurally underinvested. The idea that we've known for some time that the US geopolitically is trying to cut China off. So we think it's fully priced in equity markets in the region. And we still think that greed will trump those concerns. If we're a year or so from now and Chinese stocks are seeing outperformance that is sustained over a long period of time, then they might stop worrying about those geopolitical concerns. We still think the bull arguments on China stocks and Hong Kong stocks in particular are absolutely valid. But as we've kind of discussed, there are other asset classes where maybe that geopolitical impact, the indirect ones, are not so clearly priced. And I do think it's the geopolitical story which is weighing into commodities today, even though Chinese stocks are lower, I don't think it's necessarily the big driver there.